Dad Cam.
All right, rents are up. Say it. That's right. I hear y'all out there. Rents up, so what? Not rents. Jeez, I'm going into my rates up. Rates up, so what? Which leads me to what I was going to share with. I'm sharing with you right now. Prioritize, Gumbo Nation. I need y'all to prioritize. Single-family rents post the largest year-over-year gain in more than 16 years. Listeners, there is a reason why all these banks are selling out and these houses aren't making it to the market and these investors are picking them up and buying them with cash because rents are up more than they ever have been more than over the last 16 years. Rent growth was up 12.6% in January alone. That's the largest annual jump in more than 16 years. Single-family rent growth extended to a record-breaking price for 10 consecutive months. So when you're looking at this, folks, you have to understand we're worried about interest rates, which are up. Yes. And if I could make them 2.5% again, I would. Who wouldn't want 3% versus 4.5%, 5%? Who wouldn't? But at the same time, think about what you're paying in rent. 12.6%. That is astronomical growth, and you get nothing for it. That is why we are telling you, you have to just find out. The answer is no unless you ask. So who do you ask? Where do you ask? Folks, it's simple. It's no pressure. There's no hard sales pitch. There's no hard credit pull. That's the purpose of Snap, Send, and Save Dad Cam. And now we even have services on there that we've added. If you're wondering, should I sell my house? How much can I get for my house? We have that on there. I could have a professional put together something for you to give you an idea of what you can make on that if you're wanting to downsize. And, one of the things that, I'll share this, and we've been talking about this for years. So I'll pose it to you this way, okay? Why move out if it costs more to move up, right? That's what everybody's thinking. Oh, yeah, I could sell my house and make a ton of money, but then I'm going to pay more. Okay, then how do you make the house that you're in right now? If once you've made that decision, listeners, that it's going to be your forever home, that's the whole key. That's why it's one of the first questions we ask. After, are you a veteran? What is your income? Is this how much money do you have for down payment? Is this your forever home? And if you're thinking the possibility is yes, we've told you. If you love your neighbor, then it's cheaper to borrow the money on your home. Use the equity right now that's at all-time highs to take advantage of it. Make that home what you want for it to be your forever home. And the way for us to look at that for you for no cost, no obligation, no high pressure is Snap, Send, and Save Dad Cam. We'll run some numbers for you and let you know here's what your options are. So those are things that are going on. But my thing is this. Why rent? Rent to me, listeners, and you know my feelings on it, on the HELOCs and on the adjustable rate mortgages. That's what rent is. Because you don't know. And when you go, well, I can't afford to buy because I can't save. Well, part of that is because the landlord keeps throwing those prices up more and more each year. In rent, it's almost 60%, between 50 and 60% of income, net income, goes to pay rent. Well, I get it. How the heck are you supposed to save any money? It's almost impossible, right? So let's look at what a mortgage is. Let's look at what a starter home is. Because here's what I could tell you. All the inventory's down, this, that, or the other. I'm with you. But I know this. When I have my motivated buy, look, I've got buyers that have been pre-approved for 8 months. And I reach out to them and ask them, and, how serious are you? Because the house you were thinking you were going to get in September, October, November, December, January, February, you may have to qualify for a little bit lower, or the loan we had you pre-approved for, maybe we got to restructure that a little bit and look at it differently. And that's fine. We do it. That is why you hire Mortgage Gumbo. Yeah. We work for you. It's not about us. It's our job to provide options. And like I told a client this week, hey, we do 10% down. You buy out your mortgage insurance. You could do this, 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 and this. Now, I really want to put down 20%. All right, tell me why. Then they gave me their reason, and I said, all right, well, let's look at it this way. Again, we're not going to fist fight over it because at the end of the day, it's your loan. My job is to help you the right loan for the right price at the right cost where you're not eating ramen noodles. Screw being house poor, folks. And that's what these smuckatellis out there are doing. This isn't just show up and go, I want to buy a house, and people plug in and they go, great, 20% down, 2.5. No, now you need an advisor. Now you need someone with a team that looks out for you and works for you. We talked last week about, we had Tommy who went in, and I told y'all I was going to get the specifics. And we were offering 5.25 on a fixed rate, right? He was getting 3.5 on an adjustable rate. So called him, went back and said, how long is that rate good for, and what's your margin? And here was the response. Now, I was offering 5.25, and you go, oh, my God. That rate's high. Yeah, rates are up. So what? So my 5.25, but here's what he got. Well, I got 3.5%, so I could buy a bigger home. All right, cool. 3.5%. How long's that good for, Tommy? 6 months. So that's what we call a teaser rate. Well, Tommy, what happens after that? Well, then it's margin. Really, he said he wasn't sure, so he sent me the paperwork. It's his margin of 1.25 plus whatever the federal funds rate is, which just went to 0.25, right? So today, if they don't increase the federal funds rate at all, which we know they are, folks, today his interest rate, his 3.5 plus 1.5 is 5%. Interest only for the next 3 years versus my 5.25 fixed for 30 years. Now, it's 5% lower than 5.25. Duh! But this is his forever home, he said. And what happens in 3 years? Even if the rates are lower, let's say it's at 4.5. You just rented your house for 3 years paying nothing but interest. That ain't cool with me because they throw it out on that 30-year amortization to make it look good. So what happens there? People start buying Porsches when they really should be buying a Pinto. And you know what? Make that Pinto yours and cruise around with it with pride. It's not about keeping up with the Joneses, folks. It's about eating steak and not ramen noodles when you're in your own home. All right, let's get into our weekly segment we like to call Rate Watch. Rate Watch is brought to you by Tito's Handmade Vodka. It's America's first handcrafted vodka. And many of you who have been sitting on the sideline are probably taking extra shots of Tito's right now because you're like, what the heck happened? Well, if you're listening for the first time, here's what I'm going to tell you. And we're going to start saying it every week until it's not necessary. Rates up, so what? I'm going to teach you, educate you, and show you the options on how to charter through this stuff. It was let's just go with a absolutely poopy week for rates again. The Fed has no clue how to get a grip, and I'm going to tell you why. They waited too long. Well, Dwayne, why are the rates up? Well, for those who have been listening to the show, you understand. I told you in November when they first said they were going to start tapering, which means stop bond buying, which was keeping the rates so low. This was going to happen. Then you start throwing on top of that inflation, oil, supply demand going down, and here we have it. And because we don't shy away. It doesn't. Rates and credit does not intimidate me. Probably because I grew up selling, and when I say grew up, I've been doing this almost 30 years, selling 17, 18% interest rates. And people back then smiled, shook your hand, it seems like, and were more appreciative than the person that I quote 4.5, 5.25. And I get it. Hey, if we're a glass half full kind of person or glass half empty, we're like, well, the last 2 years were amazing. Yeah, they were. The last 2 years, when you look back on history, you could just erase those last 2 years, and rates and everything are right back in line with where they should be. It just stings because the Fed, instead of just ripping the Band-Aid off and wanting to point fingers, just rip the Band-Aid off. It's been a slow process, and it's not stopping anytime soon. And I could sit here and go, oh, it's going to be fine. Everything's great. Call me. Let's do this. Let's do that. No, I'm telling you, hey, now you're going to need somebody. And I'm sorry, Smuckatellis. This is banks, brokers, realtors who don't know what you're doing. Hey, we wish you the best. Let the pros take over now, because now you need that advisor. 1 month ago, listen to this. 1 month ago, on March 5th, stood here before you, was 30-year conventional was 3.96. Today it's 4.95. That's 1%. So when folks are calling going, all right, I'm ready to make a move, and they pretend like they didn't know, or they call back when they were pre-approved for something in November, and they're like, all right, I'm ready to buy. You got me locked. You had me locked in, right? No. Well, why didn't you lock me in? How am I supposed to lock you in? You didn't have a house. 30-year, 396, 495. 15, 333, 422. FHA was 350s, now 4.45. Jumbo was 3.50s, now 4.20. 5-1 ARM. Satan in disguise was 3.63s at 393. VA's now in the upper threes. Just from last week alone. Last week I sat here. And look, when I told y'all those numbers in the beginning of the month, you know what? I told you, the war just broken out, and I'm like, hey, maybe strife is showing itself. And it was down from the 4.18 it was the week before. But listen to where it was just last week. So for those who on a Monday go, I quote you a rate, and then you call back on Friday, it's no longer there. That's why you got to get locked in. The pain of a rate going up is a lot worse than the euphoria of it going down. Been telling y'all that for years. Last week, 4.46. This week, 4.95 on a 30. 15, 3.84. This is a 15-year is 4.22. Folks, the 15 years, as far as I'm concerned, take it off the board. Take it off the board. Take the 30. I'll show you about the bi-weekly. I'll teach you about that and beat the system. Screw the 15 right now. There's absolutely, in my mind, zero value. Well, this is my forever home. I'm retiring in 12 years. I want the 15. Nope. I'll show you how to get out of it in the same amount of time. Just in case. FHA last week was 4. It's now at 4.45. Folks, that's almost 0.5% across the board on these. Jumbo was 393, is now 4.20. 5-1 was 382s at 393, and VA was mid to upper threes. It's now upper threes. There's no more mid there. So rates up, so what? So what are we going to do? What we're going to do is we're going to create a plan specific for you. What we're going to do is we're now going to use Snap, Send, and Save even more so to find out how much can I, should I. All those Tom, Dick, and Harrys that got into this industry the last 2 years, Gumbo Nation, well, they're going away. You can even see the big companies are laying people off by the droves because they just were in it for the short term. They're not in it for the long term. They don't know how to look at your credit report, see how maybe we can get your score up a few points that will maybe save you an eighth of or a quarter percent. That when you're looking at 4.95 and now all of a sudden you're down to 4.5, that's a heck of a difference. Now's when you need that advisor to educate you on what is a discount point. Now's when you got to learn that, what was that bi-weekly stuff he talked about? And we're going to talk about that. But, folks, if you want to find past shows, there's over 300 of my shows. If you want to see me, go to Mortgage Gumbo TV on YouTube and subscribe. And then just educate yourself. Hey, even some of you smuckatellis, if you realize, and you know what? I kind of like what I'm doing, and I'm not going to do this for me anymore. I'm going to start putting my client first. Go ahead. There's a library of stuff there for you. But rates up, so what? I can tell you, so what? You know what? When it comes to refinances, people are getting cash out. For my reverse mortgage people out there, for my baby boomers, rates up, you know what? You're getting 4.5%, 5% on your money, on your reverse mortgages. So rates up, so what? I will help you manage through this. So how do we succeed, right? How do we win in today's market? And when I was putting this together, the biggest thing that I want to explain, because, look, I know a lot of our listeners, and it's spread out. It's evened out. We got a ton of millennials, a ton of Gen Xers, and boomers. So with that vast, diversification of generations, because I reach out. I'm the generational whisperer. No matter which age, I keep it real, and I could explain it to you. So let's go through how to sort of win. And grandma, grandpa, aunt, uncle, moms, and dads, hey, don't get mad at me here, but things are a little bit different now, right? So when I was putting this together, I wanted to put together sort of, old way versus new way, right? So number one, what I put together was, the old way was, hey, find that dream home, then go finalize your mortgage paperwork, right? The new rule is, you know what? You better lock in your mortgage before you even start. And what I mean by that is get pre-approved. Know what program you're going to be going with. Know what your numbers are, meaning for down payment. Know what your max approval is. Learn what your options are, meaning 5% down buyout mortgage insurance, 10% down no mortgage insurance, 3% down. Our job as mortgage advisors is to craft options for you. Like I said earlier in the show, you decide what you want. But that pre-approval is critical, listeners, and don't wait. My pre-approvals are good for 120 days. That means if you have any idea that you may buy before July, my pre-approval's good. And then all we got to do is update it after that with credit just to make sure you didn't go do something goofy like buy a new car or something like that. So if you're thinking maybe this summer's when I'm going to be able to make a move, snapsendandsave.com. Let's look at your credit today. Let's tell you. Let's get you ready. Wait broke the bridge, folks. So the new rule is don't wait. No hesitation. Old rule number 2 was, hey, shop for homes you can afford. Today, you almost got to shop for prices that are below what you can afford. But this comes back to knowing what your options are, right? Again, are you pre-approved? Because then we can let the agent know, and then that realtor, the ones that aren't smuckatellis, the ones who take pride in doing this and who actually know what they're talking about, see, they can go negotiate for you. And if that realtor knows that, hey, all you got to your name is $8,000, so what? We're not sitting here judging. What we're letting them know is, hey, he's got $8,000. He or she, them, they, she, her, whatever it is. They got $8,000. So here's what they're looking at. And then we need down payment money. Or not down payment. We need help with closing costs. So they can go make that stronger offer. That's why it's so important. So, hey, back in the old day, hey, go shop for homes you can afford now. Let's get that pre-approval and maybe let's start a little bit below where it is. And I can tell you this, most houses, by the time we do the appraisal and you're under contract after inspections, so many houses are flooding the courthouse and the MLSs and showing that they're sold, that the value a lot of times is higher than what the contract price is, even though you thought it might come in a little bit higher or a little bit, lower. Maybe you agreed at 150 and the house is coming back at 153. Hey, the old rule here was, hey, I'm going to go out. Hey, this weekend, honey, let's go whole hands. We'll grab some beignets and some coffee and talk about family, how much we love each other. You could scoot next to me in the truck. And then, we'll go tour some properties. Let's go tour some properties. Then we'll go home. We'll think about it. Take a day or so to decide on when you're going to make an offer. Today, that's out. You lost. By the time you were saying, honey, let's go this weekend, property's probably under contract. So what do? You got to act fast. This is why you need to work with full-time realtors as well.
2 minutes.
You got to work with somebody that could get you into that house. You could find out. And no, again, this is why the pre-approval, this is why you making your best offer right off the bat is so important. And you put your strongest offer up first because they're going to have multiple offers. So if you love a property, you got to act fast. And you got to be ready to go so that realtor can do what they need to do for you, and that's getting it taken care of. And there's no more, hey, I'm going to make an offer. We'll see if they counter this and that. Listen, that's out the way right now.
1 minute.
Come with your best and your strongest, folks.